this is a trader investor. In this video, I want to continue the lesson on W formation, M formation, market maker moves, and how we look at levels, the cycles of the Forex market, because Forex doesn't move like stocks. It doesn't move in a very extended long one-way entries, like not one-way long, not one-way short. It has cycles, it has weekly cycles, it has daily cycles. It moves in levels of 3, 1, 2, 3, 1, 2, 3, and sometimes it consolidates for a period of time, for a couple of days, maybe for about a week, but that's how it moves. But there are a couple of things that I want to add to the lesson today. And one is the idea of trading the London session and New York session. As I've mentioned in my last two videos, when you see an M formation during any of these sessions, you take the trade. However, the London session is a much better session to trade. And the New York session gives less opportunities. However, for those of us in the West Coast, we only take the New York session. I mean, I'm busy during the day, I have a day job, and I don't want to be staying up at midnight trying to find a trade. Then I have to monitor that trade up to 1, 2, 3 a.m. in the morning, and then try to go to sleep and catch the New York session. That doesn't work, right? So for many people, that will not work. So if you want to trade the New York session, what are some of the things that we look for? Is we want to see a high of day made, and then an M formation to take it lower, a low of day made, a W formation to take it higher, or the London session is in the middle of that 3 level move, meaning whether it's up or down. If it's at level 2 specifically, then we will enter on a V formation to go long, or on a lambda formation to go short. So that's what we look for in the New York session. Now, what's important also is, because the London session gives a lot of good signals, we have to be extremely picky. And if the London session has given us a good move, then, you know, if it has moved like 75, 80 pips, or maybe even 50 pips, I'm more cautious before I enter a position at level 2, because I don't know how far they will take it. I don't know how much they want to do level 2 and then reverse, because I want to follow what the market makers are doing. I don't want to guess. And so if level 1 has moved significantly, and at the New York session I'm at level 2, I will skip that trade, and it's okay to skip trades. And in my videos, you've seen that a lot of the signals that I show you, they were given during the London session. So if you look at this yen, the M was formed at the end of that London session, and price moved down. Price moved down, you know, for anybody who had entered it here at that formation, price moved down, what, about 30 pips? So if there was a V or a lambda formation here to go short, maybe you take it short. I was not suggesting that this is a solid short entry, just giving you an example how I'm looking at things. The other extremely important thing to note is, if you look back at the chart on any given day, most of the time the New York session will end in consolidation. Whatever London session move happens, like there was a W formation here, and then the move happens, and then New York session ends in consolidation. There was an M formation here, the move happens, and New York session ends in consolidation. Many times the New York session will come off the lows or the highs to consolidate, except on the 30th, on Friday, it decided to stay at the high. But if you look at Sunday, Monday, the low was formed, they reversed from that low and consolidated. If you look at the following day, a low was formed, it reversed and consolidated. If you look at yesterday, a high was formed, it came down, a low was formed, it reversed and consolidated. So the New York session has a tendency to reverse and consolidate. Not by a whole lot, but it will reverse significantly enough to where if you have taken a position during London session expecting to wake up the next morning with significant gains, you'll be in for a surprise because that reversal happens. So now that we are clear on this, this is why I am extremely picky before I enter a position during the New York session. Now, the other thing to note is what is a good M formation? What is a good W formation? Usually what we want to see, and I'll try to draw a free form here, is if you have a range during Asia session, they will spike it up during London and form an M to go short, or they will spike it low, form a W and go long. This is a standard way of looking at it, but sometimes this doesn't happen and you don't want to miss the trades because it's not as clean as what you expect. You have the Asia session, and if they want to take it down, instead of spiking it, they might just come in here and make the M at the high of that Asia session and enter it. So what you're looking for is this M, but they did not do a stop hunt high. Same thing on the downside, they make the W right at those lows and go long. So you don't want to miss this trade because it's happened. Another variation, there's plenty of variations, like there's a couple of variations. Another variation is they will do the M in the middle of this range and take it down, right? And so just so you're not as confused, I will do the M right outside. They will do it right in the middle of that range. They will form that W and take it long. And then another variation is in the Asia session again. They will form the M right at the low here and take it short, or they'll form the W right at the highs here and take it long. So you want to make sure that you're looking at all of these as a possibility. All of these are valid variations. You want to make sure that you're taking these variations. And so, as I said, New York session could be a sign of a short reversal for consolidation. So be extremely picky to take positions during the New York session. So in one thing that I will add for you, so that information, if you see during Asia session they spiked it to one direction or another, you can almost be certain they want to reverse it. That's not their intended move. They want to reverse it. You will very seldom see them spike it and make a W here, way up here, right? You will seldom see them do this way up here. Like I said, it will either happen right at the highs here, it will happen at the lows, it will happen somewhere in the middle, or it will happen down below because they spiked it to the downside, but you will rarely see the ones up here. And if the ones up here come in, you skip the trade because we want to be extremely picky, right? We want to know that we can enter a trade that has a high probability of getting us our 50 pips target. So looking at a couple of examples, if we look at Pound Aussie as an example, and the Pound Aussie, I have assumed that we're at level 2, so level 1 hit and we formed a lambda. This was a fantastic entry as a level 2 lambda because we did level 1, here's level 2, we're consolidating. to either do level 3 or reverse, the Asia session ending with the London session deciding what it wants to do will give us the direction. But for now, during the London session, you had a very, very good entry. You formed a pin, and at the top, from that pin to this area, you got 80 pips, right? So we are going for 50. So 80 pips is a sign that we got the 50. Again, because I don't trade London sessions, I have not taken this trades. I'm just educating you on what to look for as you enter these trades. Aussie yen, similar thing. So level 2, I was expecting that during the London session we were at level 2. Level 1, we got our V formation, level 2 entry, and from that level 2 entry, if we measure from that level 2 entry, it was only about 25 pips. But remember what I said, when you get these entries, you either look at the New York session. Once you're done with your day trade session, you exit this position. It doesn't matter where it's at, because even if you said I only trade strictly the London session, and when the London session completely gets done, and somewhere here, somewhere around 20 pips is where you would get out, that's okay. The goal is to have either a time-based or a distance-based exit that you follow, but either or is not the option. It's one end. So it's the price comes first. If price doesn't hit, time comes second, but price must be our exit points. If you are swinging, if you are looking at daily time frames and using the 1 hour, the 4 hour charts to enter, then you're not looking at the New York session for exits, because you know during the New York session they will come down 20-25 pips and consolidate before they take the price to the direction that they want. But if you are in London now, if you could be watching this video right now, you would tell me, but why do I want to exit New York session? Maybe price is continuing to go up. This is exciting. What if you wake up and price has done this and then it's this, and by the time you wake up it's down here, right? This is what I want to avoid. And this is where, if you look at the Aussie example that I gave a couple of days ago, we had a good entry here for about 25 pips, but price reversed. So if you entered London, you didn't exit early in New York when you were still up, you wake up the next day, you're already in pain, right? Because of the position that it's in. That's why I always say, if you're targeting 50 pips, look at how the New York session is handling your 50 pips. If there was another V formation here, is it a sign that is going to continue to move up, or is it a sign of weakness? So make that judgment and exit your position. So this is really key for your day trading. Just know that during New York session, price moves one direction, reverses, consolidates, and here you go, boom, it collapsed, right? So if you had entered long somewhere here, if you had entered long here, expecting price to give you the 50 pips, you wake up during your New York session and you are done, right? So if this was your entry, I'm not saying technically this was an entry, but let's just assume it was a good entry. If this was your entry, price gave you some opportunity, but this was your exit. And what price gave you initially was, from your entry to the highs, it gave you 22, 23 pips, but then, you wake up and you're way down here, or you have a stop and your stop is already hit. That's not what you want to do, right? That's why I say at the end of your session, if you're trading New York session, monitor it around 2 3 p.m. New York time, just exit your position. If you want to wait until 5, that's okay, but I say just at least exit your position when the market makers, the institutions, the hedge funds, the trade desk, the dealers, your brokers, when they're deciding what they want to do, they are consolidating during Asia session. They start that consolidation at the end of the New York session. Just be mindful of that. And that's why I say take your positions early and take your profits early enough, lock them, and be on your way. So overall, this is what I wanted to go through. The number one thing I wanted to say today is, if you are a New York session trader, be extremely, super, greatly, hugely, I don't know what other words I can use to say picky. Be very, very, very picky. Do not take positions unless you are very confident that this is level 2, I'm taking it, or it just formed level 1. Maybe they consolidated all night long. Asia session, London session, they kept consolidating and they gave you that W. They gave you the M during New York session. Boom. I take those in a heartbeat. And those will give me my 50 pips in a matter of half an hour most of the time. So that's what you're looking for. Once your M is formed, once your W is formed, that movement is fast because they have collected a lot of orders to the opposite side. Retailers that were thinking, oh, I'm going to go to the opposite side, it's going long, and they form an M, and the tip of that M most of the time doesn't even come as high as the previous high, meaning that, you know, all those longs that are hurting when price comes back, they want to get out at break even, they're not even given that chance to go to break even. So if they exit, that's more down pressure for the sell, because a long position exit is a sell action and a short position exit is a buy action. So that's why it accelerates it even more, and you will see the market makers are out of there. Once they show you the double bottom, the double top, they're gone. They're gone, and you have no pain if you enter precisely. You have a 10 pip, 15 pips stop, but you see no pain. You see no drawdown, and that price moves so fast, you'll capture your 50 pips, right? And that's all you need. That is all you need is your 50 pips. Multiply that by the number of lots that your account can afford. Don't over leverage, because that's what the banks want you to do. They want you to over leverage. They want you to have wide stops so that when your stops is exercised, your account size cannot sustain it and they wipe out your account. That's what they're after. Don't give them that pleasure, right? So make sure that you are very careful on how you trade your Forex. Then over leveraging is enticing, right? Because you say, oh, if I can do 5 standard lots, and that means if I get 50 pips, that's $2,500. If I can do that 2-3 times a week, that's fantastic. But if your account size is maybe a $5,000 account size, then you can have something go wrong like that. So that's what I want you to be careful of. That's what I'm educating you here is look for levels, look where you are in the level, look for that M, W, V, lambda formations, look for the London session or the New York session, and at the beginning of those sessions, not at the end of those sessions, at the beginning of those sessions. And the times that I use is from my time, Pacific time, from midnight until 3 a.m. That's the London session window. Outside of that window, I don't take any position. And New York is from 6 a.m. to about 9 a.m. Pacific time. That's when I take my position. So this is why you'll see my charts end where they end here, right? So I start at, oh, I got confused myself. I changed this to New York time for, I don't know, for whatever reason. No wonder I confused myself. All right. So let's go here. So from 6 a.m. Pacific time until 9 a.m. Pacific time is my New York session window. And so translate that to whatever time zone you're in, but that's your window. 9 a.m. to 12 a.m. New York time, that's your window. And so if you're in Central time zone, just subtract 1 hour. If you're in Mountain time zone, subtract 2 hours. If you're in Hawaii, even less 1 hour than my time. So just be mindful of these zones, and outside of these zones, the signals are weak. They're not the best signals. The movement can happen. You can open any chart. Even right now, you can see here, right here, you can say, well, you're wrong. I got a good signal here. I got a consolidation, and that spike down. Yeah, you can take it. But for me, the best entries happen in these windows. So take these windows as a sign of strength, take them to your advantage, and trade accordingly. So I will come back and do more lessons on this. I think this is an extremely important lesson because many retailers are doing the opposite of the banks, the institutions, the smart money. And they're called the smart money because they know how to grab your money. Don't give them that pleasure. So I'll do some more videos, and don't forget to like this one. I'm going to end it here for today, and I'll come back and do as many videos as necessary to give you the right education so that you can be extremely successful trading Forex. Forex is very liquid. It's very profitable if you can follow the banks. Don't be somebody who tries to scalp and say, I don't care about the banks, I'll just scalp 5-10 pips. That's 5 pips in your direction 100 times, and then the next time is 200 pips against your direction. You're wiping out all your gains. So that's not what you want. What you really want is to have a consistent method of identifying turning points that the banks are making and follow them. When they're out of there, you're out of there with them in their direction, because they will trap you. They will know that you want to go long with them. They will trick you. Just know that you have to form that W, you have to form that M, and you're not just entering for the sake of entering. You have a pin or a railroad tracks that give you a signal that they are faking you in one way to take it the other way. That's what you want. And they're approaching the reversal point very fast. They'll do 2-3 bars of fast up, trap people to go in that initial direction that they don't want to go in. Once they're trapped, boom, they use their stops as additional fuel for their main position. So everyone, take care, and I'll see you in the next video.